Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, May 11th, 5:04 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market continued to be in a large cap uptrend, although one of the indexes kind of faltered today. I took a look through the Dow 30 in early afternoon, and only 4 of the 30 stocks were up. Uh, some serious underperformance by the Dow, and that's usually means that a few stocks at the top of because it's price weighted, a few of the higher price stocks in there are underperforming, and that's pretty much the case if you look at United Healthcare and Goldman Sachs. Still avoiding KRE, that's regional banks and commercial real estate, mid caps and small caps. Every time they try to make a run, they get thwarted at the 21-day moving average. So if we could pop above that, and we'll take a look at that when we look at the charts, that would go a long way to possibly kicking off a run higher in the broad market. Let's check the trend gauge over here. Market leaders neutral, leaning bullish. And then again, across all 3 time frames that we track the 5 major indexes, short term, what we're doing is asking ourselves, where are those 5 indexes relative to their short term 21-day moving average, medium term 50-day moving average, long term 200-day moving average. Depending on the health of the indexes and market leadership, this is what dictates how much we expose our equity to the markets. And in all 3 cases, we've got mid and small caps below all 3 time frames, S&P 500 and the Qs above all 3 time, and the Dow above 2 of the 3 time frames. Dow faltering against the 21 today. So we want to get that straight because we strive for accuracy here at the daily market insight video. So what happened today? A whole lot of nothing. Pre-market futures were higher, and then beleaguered, stop me if you've heard this before, regional bank PacWest, ticker PACW, came out and did a filing. They have to disclose any substantially positive or negative information because they're a publicly traded corporation. Deposits are fleeing from there, and that sent the futures from like positive 0.2 to negative 0.2. And then we had PPI come out today, and that was, even though it beat 3 of 3 on 3 of the 4 metrics, no real reaction based on that. It was kind of expected, I believe. And we'll take a look at these numbers too when we get to the tail of the tape. They're actually pretty light on a year-over-year basis. So 5 days for the S&P in a tight range, NASDAQ 100 making higher recovery highs. Again, here are the final numbers. RG7, this is our 7 ETF growth composite, down 0.37%. S&P gap down 0.2, finished down 0.2. NASDAQ 100, leader, pre-market leader all day, up 0.33%. Dow down 0.7%, mid caps down 0.7, Russell 2000 small caps down 0.8, Global 60/40 just barely negative. Bonds again, price up, yield down for the second day in a row. PPI cementing what CPI showed the prior day, and that is inflation certainly not getting worse and in a lot of cases waning. In-house GROTECTION down 0.20%. We'll do the tail of the tape and charts of interest. Let's get it excuse me, into it. Here's the S&P 500. This tight range is best depicted on a 15-minute chart here. So we've got the failed breakdown last Thursday. Remember, we had the Fed on Wednesday, and followed through to the downside on Thursday. Then after the market closed Thursday, Apple with a great reaction to the earnings report. We gapped up, had a gap up, trend up day, and then 4 days just really tight since then, including that first day. So let's call it 5 days tight for the S&P 500. I'm going to contrast this, and you'll see the strength and weakness very clearly on the five major indexes. Let's show the NASDAQ 100, and you can see how it's broken out the past 2 days above its range. Then we'll show the Dow Jones Industrial Average, and you can see how we've broken lower the past 2 days from that range. Then we'll go to mid caps, also trending lower, and IWM. Uh, Yesterday, with the gap up, I found that very interesting, but that failed miserably along with the rest of the market. That was the CPI gap up, but really trading within its range, not honestly not breaking down as bad as mid caps are breaking down. We've had some Kathy Woods type stocks, some of the beaten down software stocks. These don't have earnings. You've got to be a solid. Some of them don't have earnings. You've got to be a solid company to be in the S&P 600. So the Russell 2000 is acting better. Let's take a look at SLY. That is the small cap 600. You can see it trades thinner. That's trending lower, a little bit worse than the Russell 2000. Go to the daily chart there, and you can see it's trending lower below the 21-day moving average. So back to the daily chart, let's knock through all of the indexes. There's the breakout on the NASDAQ 100, higher high. Here's the Dow. Uh, Breaking the 21-day moving average, which has now rolled over, bounced at the 50-day moving average. Mid caps MDY ran into the 21 yesterday, failed. Tight close at the bottom of the range today, and IWM behind the eight ball from the start today with the KRE gap down. Failed at the 21 yesterday, lower end of the range today. Let's go to the beleaguered KRE index. Not a lower close, but it's doing all it can to continue sucking. You can certainly agree with that. Riding the 8 EMA lower. Let's look at XLF financial index. Also not so good. How about Bank D? I talked about this being a way to play it. Don't want to play it after a gap up. It gapped up and closed at the low of the day. So for now, at least, the peak fear was at the beginning of the day as far as the banks go. Let's go on to the dollar UUP. Dollar gapped up, ran into the 50 declining 50-day moving average. It's at the top of the range. Let's look at a 30-minute chart here. Dollar, you can see I've got the most recent high of the dollar back from May 2nd flagged, and the low. This is really just chopping in a range the same way that the S&P 500 is chopping in a range. And if we're going to show the dollar with strength, what would you expect from precious metals? You're going to get exactly what you would expect. Now, gold, not that bad, only down 0.8%, still above its rising 21-day moving average. However, GDX gold stocks, not a good day today. Very strange. You saw these three very strong up days, but once it got to the top of the handle last week on the 4th, Thursday, and then the market continues to string you along. Perfect bounce off the 8 EMA, and we were long this. We were long 4% last week, and then a tight day, and then another tight day, and then an undercut and close off the 8. Everything's still fine so far. Undone today. Let's go to a 5-minute with the gap down and just really trend down all day. We trimmed half yesterday, another half of that half today. As you can see, you've got a lot of support here around the 33, 34 area, but we don't want to see another gap down and down to the 50-day moving average. So we'll stick with this 1% size now, expecting a bounce since we're very oversold on the 60-minute. No guarantee of that bounce, however, but a bounce into the 21 and a rollover, we would sell that bounce unless it was extremely strong and got back above the 21. Stranger things have happened. Let's go to the VIX. VIX was up with the gap down early in the day. Here's the 5-minute chart, but just trickled lower all day. A little bit of a spike here early afternoon Eastern time, but basically just trickling lower all day, and it's back below the 21, which is where we want it. Only had one day above that 20 level. This setup is still good for bulls. Let's go to bonds. Long bond, TLT, gap up, second day in a row, CPI followed by PPI. Let's look at the range that it's in. We'll go to a 30-minute for that. You can see it's really just chopping in a range. Let's go to 60-minute, really kind of mid-range here. Let's go to Uh, let's go to a BND, the broad bond index, near closer to the top of its range. How about IEF? This is the 10-year, closer to the top of the range. Let's go to the TNX yield. This should be closer to the bottom of the range, and it is. And TYX, the 30-year yield, mid-range, as the TLT was. Remember, yield up, price down, and vice versa. Finally, Bitcoin, BITO, down 3% on the day. If you look at the 60-minute chart here, you can see that we've broken below that 16, had the typical back test of the breakdown, lower, lower. Uh, Got to reignite this 16 to see if we get back in the range. But for now, Bitcoin is in a downtrend, having broken below the lows of the recent range. And now we will segue to the tail of the tape. You can pause it to go through in detail. The stochastic indexes are mixed. We've got the Nasdaq and the S&P 100 pretty good, and then mixed on the Dow is struggling for its direction. Mid caps and small caps negative. RG7 for the most part positive. The NASI still positive. The dollar now with that gap up neutral, and TNX and TYX range bound. Still operating under the bull case. We undercut and reclaimed the 21-day again today on the S&P 500, well above it on the S&P or on the Nasdaq 100. Here were the PPI numbers. 3 of the 4, as I said, beat. And I mean, year over year, annualized for headline 2.3% inflation, core 3.2% inflation. So significantly lower than consumer prices, producer price inflation. So at least you've got this not putting pressure on the CPI to go higher. And then initial jobless claims were high versus expectations. So a lot of ammo leading to the Fed pausing. There was the KRE PAC W down 23% on the day, was down as much as 30%. Weak economic China data hit copper and all the base metal mining stocks today, particularly copper though. The day count, 5 days of consolidation here, up to C3, 2 days above the 80 EMA, 5 days above the 21 EMA. What was strong today? XLCP and Y, that is communication services, staples, and discretionary, of course, with the dollar. On the downside, plenty of downside to pick from. And more downside considering that the indices really weren't that bad, but you've got KRE, oils, copper, base metals, gold and silver mining stocks, basic materials, utilities, real estate, semiconductors, and IGV software, all negative on the day. The fact that the Nasdaq 100 was positive tells you how strong the FANG stocks continue to be. So here's our portfolio. Only one change today. We trimmed GDX, as I mentioned. We'll take a look at a few other stocks from the focus list here, and we'll get into those charts in a moment. Bottom line, S&P 500 fifth day in a tight range. Nasdaq 100 makes new recovery high again. Dow breaking below the 21. Add that in, and KRE still doing KRE things. So we looked at GDX for the sell. Let's take a look at ONON. This is one of our top 5 positions, still holding that 21 very nicely. Celsius, after gapping up yesterday, a higher high today. That's really good action. Relative strength pretty much confirming that strong action also. Let's see. Uber continues to just hold up great after its earnings gap up, closed at the lower range into the range of the day, but just continues to make higher highs. Lulu taking a little bit of a break, maybe wants to test the 21. Volume very light. Meta strong today. Google, second follow-up day of strength after its AI demo yesterday, on volume higher than yesterday's volume. So if you wanted to consider yesterday the breakout as it was an earnings breakout, the day 2 higher high uh, in volume is rare, and it's a sign of strength, and we'll be looking for a pullback, and we'll probably be using a 60-minute pullback on 60-minute stochastic pullback under 20 to possibly initiate a position in Google here. We've been using that technique to add to some of the stronger stocks, and it was good to see David Ryan on IBD Live say basically exactly the same thing this week, that he uses that technique to sneak his way into some of the stronger names. Speaking of stronger names, Shockwave, after a sell-off and a bounce at the 21 on its earnings report, 3 days higher there, breaking above this 300 level. This is another one stock that's high on our watch list. Would need a pullback, at least in the 60-minute stochastic, to get into that. And then a couple of strong solars today. NXT, gap up on earnings. MAXN, gap up on earnings, closed at the top of its range, up 30% on the day. And this got us looking at TAN. TAN's been ugly for quite a while. Looking to bottom around this 68 to 70 level, has shown a lot of support there, and trying to get above the ADMA. It'd be a decent bottom fish above the ADMA. We've been looking at in-house uh, various systems to take advantage of oversold conditions on some sectors to get into them. And we're taking a look at TAN as one of the possible entries for that. You got to have at least three things coming to it. One, the bottom and base. Two, it has to be near support. Three, you've got to be oversold. Actually, four things. You've got to be oversold and coming up off of it, and you've got to be reclaiming the 8 EMA. Those are the four criteria that we're using for this particular system. And that's going to wrap it. As always, love to hear from you. The email's don@revereasset.com. The phone's 855 Real Wealth. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. Here's the chart of the last 13 bear markets. Our number one job is downside protection. The gains take care of themselves when the market gets back to a healthy posture. But if you're below the 200-day moving average, you want to stay the heck out of the way and avoid these big bear markets. That's our approach. Reach out if you're interested in it. And with that, I'll wrap up Thursday, May 11th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.